Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our pre-market session, our trade plan set up for Wednesday, January the 27th. It is FOMC day as well. Each morning we come together and take a look at the market, the structure of the market, drill down to the levels that we want to trade at, what our targets are for the day, and what our general hypotheses are. My name is Doug McKay. I'm the founder and head moderator. This is a subscription service, so if you want to come and take a free trial and find out more about us, I'll put up my contact information in just 1 second. Before I do that, go ahead and read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you want to get a hold of me, just contact me at quantumleapfutures@gmail.com. There is no website. This isn't a commercial venture. We are just traders operating within a self-organized learning environment. The phone number to get a hold of me, 647-545-8065, or contact me on Skype, Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And then if you like this video, there's lots of 300 plus days of these pre-market sessions. You can see our past performance. Just do a search on YouTube for Quantum Leap Futures, and if you like what we do, please follow me on Twitter at Crazy2. Okay, so let's take a look first at last night. I posted this in the chat room last night. I actually took this trade. I'll take this trade every single time it sets up, and that's a tech gap in the Globex from the close of the ETH session and the open of the Globex market. If it gaps down, you've got a very high probability of getting a trade to the upside, and so I actually got long and wrote it into the gap. The great thing about this particular tech gap is it also had a FUBAR Mr. Sneaky tech gap as well to go along with it, so it was like easy money. I said, when I saw it set up, I just get long the gap last night in the room, and I did trade it. So anytime you see the setup, don't even think about it. It's one of the highest probability trades that I've seen, because they'll always come back and fill this gap. But if you see it with a FUBAR Mr. Sneaky tech gap against the 9 EMA, then it's it's double potency. So great trade last night. Okay, taking a look at yesterday. Yesterday we were looking for an inside day of rotation leading up into the Fed day. We basically got that, except they came up and they battled this this high from the prior day and just chopped in the upper distribution and basically built some balance in between the 90 level and the 96 level. This is a P-shaped profile, which is interesting because I'm getting conflicting technical setups, whereas P-shaped profile is generally followed by a string of downward days, and usually means that within the next couple sessions that we're going to get continuation of the trend down. This is short covering. So that's interesting, but I've also got some other information that's pointing to a bigger move up. I put that inverted head and shoulders on the 4-hour in the room yesterday, and we'll take a look at that. But basically, we were looking at just chopping around, and it wasn't a bad day. So it was one of those days. The ranges, believe it or not, are finally starting to tighten back up. Our overnight range so far is only 18 points. Yesterday was only 25.25 points for the RTH, which has been smaller. We didn't even come close to the size of the ranges that we've been seeing lately. Taking a look at the news, of course, there's the Fed announcement. Not expecting the Fed to do much right now, so probably going to hold rates the the same as they are right now. But you never know. 10 o'clock we've got home sales, and 10:30 we've got crude. Now crude's been leading this market, so this will be an important one at 10:30. But the big news will be later today at the 2 o'clock Fed. Earnings continue to come out. The next few days we have a lot. I mean, tomorrow we've got 160 before the open. Tonight we have 104 after the close. After the close Thursday, 117, and then 69 on Friday. So for the next 3 days, earnings are really going to be, leading the way and showing us. Today, kind of a mix. A lot of misses, but a lot of beats and a couple big beats. But no real surprise here. I guess Apple beat last night. What a ride that was. It was up and down. I don't know, $10 or $20 yesterday. So each morning I like to start my day with a basic candlestick chart and taking a look at where we are within the trends. I use a 9 EMA and a 20 SMA on all my charts. And I'm looking for slope and separation and where the trend is being challenged or violated. You can see on the monthly, beautiful trend up, and now we're violating the trend and we're trading below the 9 and the 20. So we are violating the upward trend. On the weekly, we have this downward trend. We're getting slope and separation, but we do have this technical gap. We do have a foo bar, and so far this week is a Mr. Sneaky, which generally means that we're going to get a tech gap fill. And what's interesting is that the primary target on the inverted head and shoulders that I'm going to show you on the 4-hour, its target is around 1949, and the tech gap on the week is going to close somewhere in around that 1950 area. But the trend itself is still showing down on the weekly. We can rally all the way up into the 1950s and still be in a downward trend on the weekly. On the daily, you can see that we do have this trend, but it is being challenged. We're losing some slope and separation, but so far, we're holding below the 9 EMA and seeing this trend continue to the downside. On the 4-hour, and I've got this drawn on another chart. Just let me bring this up first, and then we'll come back to that one. Here's the 4-hour inverted head and shoulder, left shoulder, head, right shoulder, sloping neckline. Neckline is basically in around the 1902 level. You can even use the 1900. The first target is 1940. I'm sorry, I thought this secondary target, the 50% is at the 1952 area. The primary target is 1964, and then the extended target is all the way up in 2002. And remember that this pattern doesn't get violated until we break below the 1804. I like to use the right shoulder as the violation, and that brings us down to the 1850. Surprisingly, 1850 is our daily ATR downside target today. Our ATR is running 46.1 off of the high so far tonight. Our downside daily ATR target is 1896.75. Anyway, just like I said, I'm getting conflicting information in terms of P-shaped profile leads to continuation of the downward trend because it's short covering, but we do have this pretty nice looking pattern right here. So going back to the 4-hour, we are violating this downward trend, and we're getting consolidation down here, and looks like we're getting a possible start of an upward trend, but it is weak right now. We have no separation. Going to the 1-hour, consolidation again, no, we were getting a trend up and now we're consolidating, but we are back above the 9 and the 20. Got a bit of a tech gap, Mr. Sneaky going on right now in this 1 hour period. Going to the 30-minute, we do see that we are starting to get a upward trend and getting slope and separation, but we do have a technical gap with a possible foobar Mr. Sneaky here on the 30-minute. On the 15-minute, you can see that the trend is now continuing stronger. So we're getting a stronger trend on the 15-minute. And on the 5-minute, we had a pretty decent trend going, created this technical gap. There's a foobar Mr. Sneaky, and we've closed out the tech gap, and now we are trying to break below the 9, so we're challenging this upward trend on the 5-minute. So going to the big picture structure, so we're currently trading right here. This is what I was talking about yesterday, that we're likely to have a balanced day today until Fed in around this 1890. Our 3-day micro composite, okay, VPOC is at the 1890. It is now also the 7-day micro composite VPOC. So we are finding some balance here at the 1990. Just above us, we've been using this 91 as a key line in the sand when we were up here and when we were down here. We've basically chopped through it so much, it's not as strong of a line in the sand. It's going to be a trade area, definitely, but I mean, it was 2 days ago I was using 91 simply to get long or get short, but we've chopped around it. We're violating it too much. The next big key line in the sand is going to be this 97.75 above us. And then, of course, the one below us is still at 1970. So I'm expecting a range somewhere in here today between the 97.75 and the 1870. 91 is going to give me some guide to whether or not I want to be the short, or whether or not we could pop up and challenge the 97 and pop into testing this 1900 level again. And then if we get into the 1900s, I'm looking for a rule of 10, and we could get chopped between the 97.75 and 975 coming into Fed. I think they're going to make the move early today, and then they're going to balance out and go sideways into the Fed. That's usually what happens. So I'll be seeing how they handle this 91.25, whether or not they go for the overnight high at 96.75 and challenge this 97.75, or whether or not they reject this 91 and take us down first towards the 78 and chop around in this blunt area of the profile, basically from call it 86 down to the 70 area. Below 70, then I think we make a bigger move down, and we go down and challenge those 1850s. Remember, our daily ATR target is down here at the 1850.75 and right at our key support area of 1848.75. Anything below that, I think we're getting a bigger move down in towards the lower 1800s again, and I don't think the next time we get down here that the 1804.25 is going to hold. I think we actually come into the 1800s. So that's what I'm looking at the big picture. Let's take a look at the overnight. So overnight, our overnight high is at 96.75, just below our value area high. Our change percentage of range target price is just below that as well at 96. Our floor pivot is down at 79.75. We've got this blunt area down here I'm going to talk about in a minute, but you can see this this P-shaped profile, upper distribution, tail, and we close in the upper distribution. Our overnight low is down at 1878.75, just below our floor pivot, and basically right at yesterday's open at 78.75. Our pretty balanced profile for most of the night. The inventory is net long to neutral. We have our VPOC, and it's not likely to shift. Might shift if we come down into the 86, but 84 is our overnight Globex. There's a little bit of an LVN here at the 90 that reinforces that 91 level. But other than that, there's not much more information that we need from the Globex session. So let's expand this out. And now we're trading at the 91. We're going to open in the upper distribution and in balance in around the VPOC. Remember that not only is the naked VPOC from yesterday at 1890, the 6-day or 7-day microcomposite, so the most accepted price in the last 7 days, and yesterday is 1890. No surprise that our VPOC matches up with the 90 because they're balancing this in around this price point coming into the Fed announcement. So we're going to open up in range, in value, looking for an open auction in range with a lot of two-sided trading. So be careful. We're not going to get a big, we shouldn't get a big tick gap on the morning, so there's going to be two-sided trading, so probably won't be any one and done today. It's going to be choppy in this area, so there's not a lot of edge either. So basically the first area that you could use is the value area low and the closing swing low, and then you've got the closing swing high here at 97, which is also the upper value area at 97, just below the overnight high. But the problem we have is there's not a lot to guide us, between the value area. It's very toothy in this area, and it doesn't offer a lot of determined fair value or clear rejection areas. So if you want to be aggressive, I'm going to use the 91.50 as a guide. I'm going to adjust it up slightly to basically where the IB low was yesterday, and this little LVN, and I'm basically going to use a zone, a trade zone between the 91 and the 92 area. I really don't want to be long until I'm above the 92, so I want to make sure that they get through that CLVN at 91 and above yesterday, above the IB from yesterday. So that, I'm sorry, it's the IB high, not the IB low. So that we can, have a higher probability of coming out and taking out the overnight high and the close of the prior day. And we've got a lot up here. We've got the overnight high, we've got the CPR, percentage of range target, and we've got the gap close all up here in the 95 to 96 area, with the value area high just above it at 97.50. Above the 97.50, I think we go test the 1900s and test the range high from yesterday. And then all our targets remain the same above. You got 0250, 0350, and the 0550, and then the where we looking for the rule of 10 to go up to that 975 area. I wouldn't try to short this. if we get into the 1900s. That's why I'm not going to put a trade area. I want to be long above 1900 and stay long into that 1907, I'm sorry, 1909.75. There's not going to be any real edge here until we get there. And then above that, you've got clear target. The main targets above are up here in that 1915 and a quarter gap. That's also that prior microcomposite VPOC and the naked VPOC up here. So all in that 1914 to 1915 range. And then a little bit of resistance coming in at 18, but anything above 18. Our upside daily ATR. Our ATR is running at 46.10 right now. That gives us an upward daily ATR target all the way up to 1924.75. You've got 26 and a quarter above, 29 and a quarter, and then our key line in the sand is still going to be, up here at the 32.75. Above the 32.75, then I think we make a bigger move up. Our weekly ATR target, weekly ATR is running 74.82, so our weekly ATR target actually comes down. And that comes down to 1926. That's going to put us, come on, just above, get rid of this. That's going to put us up just above the daily ATR target. So our daily and our weekly ATR target is basically in range today. Our low for the week is 1851 and a quarter. So we're close to that, the ability to hit the weekly day ATR target. I mean, if we get into the 1900s, we have to think possibility of a move all the way up into that area. It's within our range. So those are my targets to the upside. If we get below the 88.50, this is really going to be a warning line for me. It's going to be this area right here that I'm going to be watching as a key line in the sand below us. Because below here, where we've got this tail from yesterday that's very thin, and we're likely to make a bigger move down to come down and take out the overnight low and test the floor pivot. We've got the overnight VPOC at 84, and there's not a lot down here. If we take a look at it, I would obviously be targeting the 78.75, but look how blunt this is. Not only is it blunt on the composite, but it's blunt on this 2-day profile. We've got the 2 wicks, and it's blunt on the 3-day profile. So there's not a lot, and it's going to get very choppy down here. So just be careful. But the main target below is going to be the 78.75 area, and all the way down, to 70. There's just nothing. So there's no real edge down here. So the overnight low is what I'd be looking to take out, and so if it get below 86, really try to stay short all the way into into the 78.75 and possibly continuation to test the range low at 74.50. And then our key line in the sand is going to be this 1870 again, which is just above this gap fill. And this, we get below this, I'd be looking for a trend day, and a move down into the 67 and a quarter. And we have that range low at 68. Remember that this is where the buyers stepped in to hold us when we flushed the other day. And we closed right in. So we got a gap close. We've got the CLVN. That's where the buyers stepped in. If the buyers don't step in here again and take us back up, then we get into a trend type situation with those moves down into the 67 and a quarter, 64.75, the gap fill at 61. Remember the 2-day microcomposite VPOC for the last time we came down after hitting that 1804 and a quarter, where the accepted price was at that 64. So this is going to be the main target below the break of the key line in the sand and the break below the prior day low. And then you've got 61, and then again it gets very blunt down here until we get down into the 48. And you can see that we have the possibility and the range right now to come down to this 1850.75. And I think if the market reacts negatively to the Fed announcement, I think we could pop down into this area. And if we break the 48, then I don't think that we're going to have a bounce. I think we're going to continue down and work our way down towards these lower targets. Our weekly ATR target is still down here at 1829.50 off of the weekly high of 1904 and a quarter. So we still have room to go to the downside. So that's what I'm looking for. My main hypothesis is either a move up to challenge and chop around in the 96 area, possibly pop into the 1900s. But if we stay below the 1900, or we get up and we reject the value area high and work our way back below 91, then I expect to come down and chop around in this area between the 86.75 and the 70 level. Anything below 70, I'm looking for a trend day down. Anything above the 1909.75, I'm looking for a trend day up towards these upper targets. Pretty straightforward. I know we're running a little bit late. Let me just show you a couple things in gold. I wanted to show you this pattern I was showing the other day. We had this flag pull with a measured move up into the 2280 area. We got to 2350 and we failed off of there so far, and coming back to the flag again. So that was a really nice measured move on gold. So far, gold has broken out. Remember, we were looking for that break above the 13 level to go into this next target up here at the 18 level and have a breakout of the current balance. So we have now broken out of the microcomposite and outside of this balance area that we've been chopping around in the 1100s. We're clearly now accepting the 1100s. Remember, my main hypothesis on gold is a slow grind up this year all the way back up into this composite. Remember, this composite goes from 2008 till today. So we're now back into the 1100s. I'm looking to start to grind our way back up. That changes, of course, if we break back below and get back inside of balance and below the 1100. But so far it looks like we're going to hold the 1100. If I draw a profile now, I want to know, where are they accepting price after the breakout? Well, they're accepting price at that former composite high volume node, and our 2-day microcomposite VPOC is at 1119, 1118 area. So you can see how the longer term price acceptance is coming into play for the price acceptance after the breakout of the range. So typical auction logic. Where did we accept price before the breakout? You can see the smaller profile. We accepted price, okay, in around the longer term, and then we broke out. Now we're trying to hold value higher, and they're trying to hold it at a prior long-term price acceptance. Key line today will be the 1111 area. If we get below 1111, look for them to move down into the 1106 and 1102 area. If they accept this value, look for them to creep up and test the upper value up here in around the 1121, and if we can break that, we'll probably go and put in a new high up towards this 1126. So we're about 4 minutes into the open, so that's going to complete our pre-market session. Be careful, it's going to be choppy on this open, and we could hit, two-sided trading coming into it. Key line in the sand for this morning is 86. If we hold and get above 92, look for them to move up into the 96 area. So that's everything. As always, trade well, trade safe, and we'll catch you on the flip side.